Everyone, another Tuesday night. If anyone else's week is thrown off, welcome to the party. Hope you guys got to enjoy your long weekend. Hope you got to kick back, relax, and are ready to finish off the year. It feels like this year flew by, but what else is new? So yeah, thanks for everyone coming out here on a Tuesday night, and let's rock and roll.
Yes, sir. All right. Today's agenda, much like every other agenda, there's the man, the myth, the legend himself, Jerry Miles. Welcome, sir. As every other night, we look to be here for at most 1 hour. So we will be shutting off at 9 p.m. And we'll be going through this agenda. We'll go through our introductions. We'll try to get to know you. Some of you new folks would love to hear where you're from and what you're about. Go through our ecosystem so you guys can learn what we offer here in this community if you're new here, and then we'll follow that up with our topic Q&A. We're just going to go through some general questions and answers around napkin underwriting. Then we'll get our napkins out and we are going to be going through some deals tonight, and again, just want to throw this out there again. If you have any deals you guys want to work through on this napkin, let us know, and we'll go through it. And if this is your first time, and you're not familiar with this napkin tool, let us know. We'd love to share it with you. It's free of charge. All three of us built it together, and I personally love to use it. So with that said, we'll move on here. So we'll let you know who we are before we ask you who you are. So Ed, who are you, man?
What's up? As you guys know, Edward Shamirian out of Los Angeles. Love underwriting, been in real estate for a long time. I'm a licensed agent out here in Cali. Got into the multifamily game, got that bug, and I love everything about it. So if you got any questions outside of here or during the call, please reach out to me. My number's in the chat. And you'll see our emails. You can jot that down a little bit later. But yeah, looking to help out as much as I can. Love underwriting deals, love helping out the community, and looking forward to connecting with all of you if I haven't yet. For anyone that I have, welcome back.
Nice. And thanks, Ed. And my name is William Otis, and I'm here with my ride or die partner, Aldo and Chetta. And we are a couple of senior living guys who have collectively about 25 years of experience in the senior living space, specifically in operations and asset management, and decided about a year ago to jump into the multifamily world. A few duplexes and single family homes, and have just wanted to continue to build that portfolio. And so Aldo and I were like, hey, we have all this experience in senior living. Let's make this work in multifamily. And so we're super excited to be here. Aldo is a freaking ninja when it comes to underwriting, along with Ed. And I'm just the third wheel here in the group, but man, I'm excited to be here with you guys, and look forward to sharing with you all this evening. So.
Don't let Will fool you, man. Don't let him fool you. Tell us about you. First of all, if this is your first time joining us, put a 1 in the chat. We want to know if you're okay. Philip, yeah, welcome. Anybody else? Okay, awesome. Yeah, some great new people here. Would love to know also where you heard about us from. So start putting that in the chat. How'd you hear about us? But before we do that, Jerry Miles, let's go. Let us tell us a little bit about yourself. So we'd like for somebody here to raise their hand and tell us about who you are, where you're from, kind of what a little bit of your story is, about a minute, and what you hope to gain from being here. Go for it, Philip.
Hey, Phil Jenkins, how are y'all today?
Awesome, man.
I'm a real estate agent in Virginia. I also have a vacation rental in South Carolina, and I'm part of a limited partnership for multifamily we're doing in Tennessee. So I'm looking to do more in the multifamily space as well as self-storage. And full-time, I work for a communications company. So I do all this sort of part-time on the side here.
I love it. A true multifamily freedom chaser with his W-2 and the side hustle, man. That's awesome. Glad.
Can I ask one more question for you as well while we got you on here? So besides adding to your portfolio, well, what role do you like to play? What role are you looking for in terms of like partnering with, or like just other people in the community that can kind of complement what you're good at?
Yeah, so a couple of things is I want to move obviously to a GP. I think that's everyone's dream in syndication. So I have contacts with folks who have deep pockets, so I know I can get debt. I need to, the one thing I keep waiting on is underwriting. So, I've developed spreadsheets and things of that nature, but I feel like I intuitively don't understand it. And I want to better understand why the numbers are what they are versus plugging them in and having the Excel, because you can't, you want to be able to go through a little bit quicker pace. I'm on part of Grant Cardone's club, so I attend his Wednesday calls where we run through some deals. But that underwriting, the pace of that, you can't really learn it. So it's not self-paced from that perspective. So I really want to grow into syndication, GP, and self-storage and multifamily, focus on that in terms of a growth of the portfolio. And then migrating any of my single family. I have 2 single family properties, a vacation rental and a renovation that's closing next week. So I want to move all that capital into a larger deal.
Amazing. Thank you for sharing that. Do you have a calculator at the moment that you're using, or? Oh, that's definitely not what I meant.
Yeah, no, I'm not using any app. People have shared apps and stuff. And I built my own Excel spreadsheets, which I'm plugging them in. But I see you have a Google Doc. I'll take a look at that as well.
So real quick, this isn't the calculator. I'm gonna upload that as well. But while we're in the topic of introducing ourselves and with all these new people and new faces, the 2 links I put below. One link is for you to fill out your information so people know how to contact you, reach out to you. The other one is a Google form sheet that populates once you fill out your form. So everyone who has put their name and information onto that form, their information has populated onto that sheet. What that sheet is for you to have access to all the people in our community, network with people who are either targeting similar areas, which is, in my opinion, a great way to start connecting with other like-minded people who want to invest in a similar neighborhood or city or whatever the case is. And then also, if you have a question about an area, it's all about being resourceful, using the community, growing, and so fill out that form and you'll be able to connect with other people. And then I'll attach the calculator as well. But yeah, awesome. Thank you so much for introducing yourself. And looking forward to connecting again and getting to know each other.
Thank you.
Awesome. All right, we'll take one more. Love to hear from you.
All right, and the third sheet I just attached is the calculator. Okay, we got all 3. We're ready to go.
Greetings, how's it going, everyone? I'm Akil from Atlanta currently, by way of, again, Morocco, Casablanca to be exact. But I'm Akil. I'm here primarily. I work in I actually work in education. Actually going to get my master's. I'm in grad school now, and pursuing my master's in special education. That there's a story with me behind that. So that's one of my near and dear goals. But also I've had a lot of family ties and lineages to real estate. whatnot. And so I've always been inquisitive about learning more about real estate and how to utilize and best take advantage of the different assets that we have. I'm currently an understudy, if you will, for a capital raiser for a group that we're working called 73 Holdings. And so we are a real estate holdings and private equity firm, doing a lot of interesting and exciting things as it pertains to marrying the world of sports with real estate and NFTs or NFTs. So if you want to hear some more about that, feel free to give me a shout. I am a newbie, so I'll look to get my name on the list also.
Awesome,
Peace.
awesome. I think I'm down to just talk about sports and incorporate it any way I can. For anyone that knows me, I'm a sports junkie. If you don't know me, yeah, it's bad. If there's a place for me to go discuss this obsession, I would. But awesome, thank you for introducing yourself. I think we saw a few more people, if I'm not sure, that were new. If you can and want to unmute, please go ahead. If not, we can continue. But yeah, thank you guys for sharing. That was awesome.
Hello, I just logged on. Good evening.
Hi, how are you?
I'm doing great. How about yourself?
Doing well, thank you, thank you.
Great. So I'm sorry I logged on a little late. What did you want to know about me?
So yeah, we'll just do an intro, where you're from, what you're looking for. If you kind of know what your superpower is in the real estate multifamily world. And then if you have them in the chat, I don't know when you came on, but just the directory and the form to fill out, so your information is saved as well. So it's just a way to network with the community.
Okay. All right. So yes, I am a real estate investor. I started investing over 20 years ago in buy and hold. So I'm looking at using a long-term strategy for building wealth. And then I got into some short-term rentals. I have a couple of those. I joined Sub 2 about 6 months ago because I wanted to learn more about getting into deals creatively, which is something I haven't done. You know, I always went to the bank and got funding. So it was kind of slow. But anyway, that's why I joined Sub 2. And right now I like talking. Well, I'm learning to talk more to direct to agents. I find that to be a little bit easier than talking to sellers. And I'm learning underwriting because I'm fascinated by, the numbers and how you can move things around. It's like, any deal will work as long as you negotiate properly and you know your numbers. So that's what I'd like to get more proficient in and help others.
Awesome.
I'm sorry, I'm also looking to get my first apartment building. So
amazing, amazing. I think Will and Aldo are thinking I wrote that script out for you and told you to say, because it's like a lot of the stuff I say, it's like creative finance, scaling, moving quickly, getting creative, making a deal work, even though most people are like, I don't see it. I'm like, I'll figure it out, I tell everyone I can make an offer on any property and I can make any property work. I just can't promise the seller will agree. That's the problem. That's the holdup in the whole. That's half of the equation I'm missing right now.
Yeah. Same here.
So I'm in Sub 2 as well. So nice to meet you. Thank you for volunteering. And if we don't have anyone else, I think we're good to move forward.
Yeah, welcome, Tracy.
Thank
Well, hey
you.
guys, this is our community right here, the MFC family, and we really appreciate you guys joining us on Tuesday night to learn a little bit about underwriting. But man, there are a lot of other Zooms that you guys can plug in, and the best thing about this community is it's all free. And actually, I see a few other of our leaders here on the Zoom tonight. I see Jerry Miles hopped on and Peter St. Martin. Glad to have you guys here this evening. But yeah, we are the Multifamily Freedom Chasers, and here's a little bit about our ecosystem and our community. And it all starts out with the three guys who started the Multifamily Freedom Chasers, and that's Marcel and Trevor and Vic. And that's on Sunday nights at 8 o'clock. This says 8:30, but it's I believe it's at 8 o'clock now. And really, what the purpose of that Zoom is for is just to really get activated, to get excited, to get charged up for the week, and really just be able to listen to some pretty incredible celebrity speakers that come in on a week-to-week basis. And so you definitely do not want to miss Sunday nights at 8 p.m. Phenomenal time with the three founders of the Multifamily Freedom Chasers community. And then on Monday, Peter St. Martin and Ed, they help lead out with Broker Talks. And really, it's all about taking action, calling brokers, getting to know, how to handle deals or how to talk about deals with the brokers. And which then leads you into our Tuesday night Zoom, where once you have your deals, then you need to learn how to underwrite them. And so that's what Ed, myself, and Aldo, that's what we do. And it's all about napkin underwriting and just kind of making sure, hey, is this Aldo, what's our saying here? Is it a deal or is it
Is it a dud or a stud? I
dud
got that
or a
from Trevor.
stud?
I can't take credit for that. I got that from Trevor.
All right, that's from Trevor. So is it a dud or a stud? So that's what we're going to do here tonight. And then of course on Wednesday nights, alternating weeks, it's the Miles crew. Talk about financing. Jerry Miles is a broker, and some phenomenal information comes out of that Zoom on Wednesday nights. And then on the alternate week, Victor N to the G also does a more advanced underwriting Zoom. And so again, that's on alternating nights or alternating Wednesdays, excuse me. And so we would love for you guys to get plugged into to our other Zooms that are part of this ecosystem and be able to share with you a little bit more about what the Multifamily Freedom Chasers are all about. And so with that, we're going to go into a little bit about our contact information. So feel free to screenshot this. These are our emails. If you guys ever have questions, or if you have comments, or if you have a deal that you want to talk about or share with us, feel free. You can contact us here at our email addresses. We also have our phone numbers and our names and our handles here. So love to hear from you guys. And now we're going to go into our main topic. So Aldo, take it away, brother.
Yeah, so, typically we'll have a little bit of a topic, but since we've been over the last 8 weeks kind of going through topics, and we typically have about the same people on here, but we have a lot of new people here today, which is great. Our thought was to just go through some general questions around, napkin underwriting, or even what it is. So we'll open it up for a little bit if you guys want, and then we'll get into some deals to underwrite from our end so that you guys can see the process. A lot of you are new here. Before we get to that, put a 1 in the chat if you're familiar with the concept of, or if you're not familiar with the concept of napkin underwriting. This is your first time kind of getting into this. There we go. Okay, great. So essentially, napkin underwriting is just a quick way to be able to tell whether a deal is worth pursuing or not, right? You can spend a lot of time underwriting a deal. If you're good at it, you can kind of get a semi-decent underwriting done in less than half an hour or so. But there's a lot of research that you have to do, and a lot of information that you need to have to underwrite a deal well and really know your numbers. In addition to having an idea of what the debt market is doing and have a proper debt quote. And so we're just gonna tee it up there for Jerry. Jerry's our official debt broker for the Multifamily Freedom Chasers. And so please be sure to contact him. Jerry, put your info on the chat so people know. If you need a debt quote, anything, agency, recourse, non-recourse, you know, flip loan, construction, whatever, Jerry can handle it. Excuse me. And so, you know, it's a good way. So going back to the napkin, it's a good way for you to know whether you should, you know, spend time going in depth into the napkin underwriting. So with that, we're gonna go ahead and get on
Real
here.
quick as well as you're pulling that up, I did attach a link. I'm just posting links today. I guess that's all I'm really good for. But the link to the YouTube page. The YouTube page has old videos and old calls recorded from every single one of those Zooms that we mentioned. Not just ours, not just Sunday night, but Sunday through Wednesday, actually, and any other special ones we've done. So please let us, please hop on there if you want to watch any old ones. If you want to rewatch this one, you want to send it to a friend, whatever the case is, that's where you can find our old videos.
Yes, sir. You can go way back and you know, Will mentioned Victor having some more advanced underwriting Zooms. There's a lot of really good stuff there in that vault, and it's free, going over you know, how to underwrite deals more intensely or more in more detail. So I see that Tracy, you have a deal for us to potentially look at. Do you want to kind of talk us through that?
Sure. And I wasn't expecting this tonight, so I don't have it like, you know, laid out. I have the OM. I was
Okay.
just looking for it.
Sure.
Let me get to it right
And
quick.
as you're doing that, folks, what we're gonna do is just use this tool. There's just a few items that you have to know, like your average rent, total units, and current occupancy, and of course, you know, the asking, or what we call the whisper price or guidance price. And then
Hey,
of course-
Aldo.
Yes,
Hey,
sir.
sorry to interrupt you, man.
No.
Since we do have quite a few new people here, do you want to do maybe just a very quick overview? I mean, I guess you're kind of doing a little bit right there, but maybe
Yeah.
just give a really quick overview on this tool.
Yeah, that's a great idea. And I see several people on it right now, so that's good. So, you know, three components on here. Well, really four components that will help you decide whether it's a good deal or not, or to further pursue it. The first part of it is going to be where the current performance of the building is. The second part of it is where we believe it could stabilize at, or what we believe it could perform at sale, basically, or what we call that stabilization. And then this portion right here is all of your different units, size, and rent for each one of those, so that you can get a, excuse me, an average rent for your entire property. And this is your current in-place rents, and then what we believe we can take the market rents to, right? And so this is what we're aiming our rents to be by the time that we sell. And then over here is just a little tiny debt overview that is not complex at all. And it is not a debt quote at all. It's just an estimate of what we think we're going to be at from a debt standpoint. And it's great that we have Jerry here today, because he could give us a quick update on where we're sitting at as far as interest rates are concerned. But with that said, you know, on this part, all you need to know is your average rents. You know, you can get that from the OM. You can get the unit count from the OM, and it'll typically be on the offering, you know, on the face sheet. The current occupancy, which you can also get from the OM, or if you talk to the broker, you also can get it from them. And all of this is written in for you. So I'm actually gonna have to do this here. These are all formulas that help you calculate what what your going in cap rate is going to be. And you know, we spent several different we'll call them episodes or Zoom calls kind of going over what that going in cap rate is in, you know, as far as this tool is concerned, right? And what it tells you initially. And so you know, so what it's going to do is it's going to calculate your total income. It's going to then take an expense ratio based on the class. It's going to then calculate an NOI. And then from that NOI as a function, it's going to calculate a going in cap rate as a function of the current valuation. So, and we'll get into that later in more detail. And of course, the valuation is just going to come from here, whatever you put in here. It'll break it down per unit costs, and then an idea of what your potential rehab costs are going to be to get it up to market based on the class and the rehab level, you know, that you might have on there. Okay, so that's the first part, and that's the first part. That's the part that we're going to focus on right now, because it really is the more important part for us to be able to know if we're going to move on. So with that, Tracy, do we have an idea of what the average rents are here?
Yes.
Okay, hit me with it.
Where'd it go? Pulled it up here. Oh, here we go. Okay, average rents are $675 per month.
Okay. And your total units?
48.
48 units, and its current occupancy?
85%.
85%. Okay. You know if it's a B class, C class, A class?
I believe this is a C class.
Okay. All right. And what is the guidance for this?
Okay, the guidance.
What do they want for it?
Oh, right. Sorry. Okay, 750,000. And
wow.
This is in Alabama, and this is also this was pulled down from an auction. It's going to be going to auction.
Wow, that is not very expensive. So 85% occupied at this point. So there's revenue coming in right now, I'm assuming.
Yep.
Okay. Oh wow, that's a lot of questions just came to my mind about this.
Where do
All
we
right.
begin?
Sure. Yeah.
Okay, so so it's the expense ratio on here is probably going to be, well, it could go either way, right? It could go like way low. That's why it's going in the auction. It's probably very little maintenance done to this, so some deferred maintenance on here. Or it could go high just based on the unit count and occupancy and the needs of it. Do you know when it was built? But just, you know, by chance.
No, I'm looking for it.
No worries. Not a big deal, but it will give you a clue as to you know what could potentially. So I'm assuming the rehab level is going to be heavy on.
I see it. It's 1967.
Okay, yeah.
Is this in Birmingham?
Yes.
Okay. Do we know about this one, Will?
Yeah, I've seen this one.
Okay.
Oh, really? Okay.
Yeah. All right. So current NOI based on, you know, this rule of thumb expense ratio will put us at 165. So 675 for a C class here is not bad. It's like, what would you call it? Old market. And so a lot of folks are coming up from about this much. And some folks are, well, depending on the location of that. Do you know if it's north, south, east, or west Birmingham?
No, I don't know.
Okay, that's
Um,
fine. No
yeah.
worries. So, I mean, this could probably drive to at least $100 on the market rents. Does it tell you kind of where you can drive the rents to?
Let's see. Well, it's showing comps of, so they're 2 bedroom, 1 bath. It's showing comps of 918.
Yeah, that sounds right. Be safe here. All right. So that's the starting bid, right? 750?
Yes. Yep.
Okay, it's interesting. It likely won't trade at 750.
Right.
So 48. Let's call this, let's go to 2 million. Yeah, so in Birmingham, a totally distressed property will trade for probably 20s. I think that's kind of been our experience in the past.
You said 20s?
Yeah, in the 20s per unit.
Oh, okay.
And no, not 20 millions. So, this, it could be less than this potentially. I don't know. This is a complete guess. So let's just say, I mean, let's put it at, mid 50s here. So green. So let's say you can snatch this at 2.5 million, right? And if this weren't an auction, and the guidance price for this would be 2.5 million, then we can kind of go off of that and say, okay, NOI is 165. We know how to back into the cap rate, the capitalization rate here, which is, by the way, my weekly cap rate definition. And there's 2 cap rates that you can look at, as very well explained by Peter St. Martin in one of our episodes in the past. But for you to get cap rate stands for capitalization. Yes, very bad management. Stands for capitalization rate, which means it is the return that you would get for purchasing this property all cash. Unlevered return. Unlevered return is what it's called. Right. And so what it means is we pay $2.5 million and we get an NOI of 165,000. The return is the NOI because there's no debt to pay beyond that. So that is the return if you buy it unlevered. And so that is 6.61% return, right? That is your cap rate at this purchase price. That is different to say from the market cap rate, which is determined by the market and in several different factors, right? And so this is the going in cap rate. So when you have this right here, you take this cap rate and you compare it to what your interest rate could potentially be. Now, 5.7 is 2 to 3 weeks old. If I'm not mistaken, I haven't seen where the 10-year treasury is to tell, what a non-recourse loan would be, but I would assume that it's inching closer to 6. And Ed, if I'm not mistaken, you were saying it's closer to 6. Jerry, what are your thoughts?
Because it's important to know also how much is leveraged. Banks are hesitant. There's a lot of uncertainty, so it's important to. I'm just gonna shut up on the Jerry talk. Like, why do I even bother?
The 10-year treasury was like 3.68, something like that today. So I mean, you're getting real close to that 6% range.
Mm.
And on a property like this, if you had the occupancy up above 90, it would qualify for agency debt. If if your conditions were good and as far as the property condition and things, but the, as far as a private lender, if it didn't qualify for agency debt, I mean, you're gonna end up paying probably 8, 9, 10% in interest, so.
Yeah, that's a really good point that you brought up, Jerry. Thank you for that. I was going to say that because you're below 90%, it is unlikely that it'll qualify for an agency loan. I mean, you'll have to have some really great contacts to, you know, pull something off like that. But yeah, 90% is definitely the cutoff mark for qualification, as well as, you know, more than $1 million. So,
And excuse me, I have a question. When you say agency loan, meaning like just your traditional lending where you get a normal interest rate?
go for it, Jerry.
Yeah, it's
Freddie and Fannie, right?
yeah, Freddie and Fannie.
Okay. Okay.
Bud,
Okay.
but, yeah, that's who you're talking about when you talk about agency debt.
Okay.
You know, sometimes if you can find a local bank that is lending on commercial real estate right now, on a deal like this, you could get some favorable rates on some bridge debt or something. It would be kind of tough to find a lender on this if it was an agency that isn't going to be outrageous as far as your interest rates and things. And the sellers know that. I mean, whoever's listing a property knows that. The sellers themselves might not know, but the broker that's selling it knows. So I mean, if they're looking at getting this and selling it for like a 7 cap or an 8 cap or something like that, your interest rate, you know, if you get bridge debt, it's going to be higher than that. So.
Okay.
Yeah, it's ridiculous out there. So you might want to wait till it's 90%, or, you know, one thing we did is, you know, we would put in a contingency in the LOI that we would only activate once it hit 90%. And then, you know, you can start going through the agency debt process for that.
Great point. Okay.
Yeah. So because as Jerry said, if it's not agency, it's gonna be a lot more than that. And then of course the proceeds have to be at least $1 million for at least one of them. I don't remember if it's either Fannie or Freddie. So with that said, let's say that it's 90%. So let's change this to 90% and pretend that it's 90% right now, just for, you know, educational purposes. You know, at this, say when we snatch it at 2.5 cap rate, going in cap rate being 7%, then we go in and excuse me, compare it to what the interest rate is, and, you know, let's just call it 6. You know, what the heck, why not? 65% LTV, you know, is that what you're kind of seeing, Jerry, around the 65 mark for agency? Yeah.
And so, it's all debt service constrained. So I mean, we can lend up to 80%.
Right. True.
You know, but it's where the market is right now. The rates have gone up, and the asking prices and cap rates haven't come to meet really. Haven't come to meet it all the way just yet. So 65% is about the best you'll do. I mean, I've even seen some deals here recently. People are trying to buy at 45%, you know, and you know, oh, well, it's in California or it's in Miami, and they're trying to make it work because of that. You know? So, and that's just the way it's going. Yep.
Wow.
I put 55% down on a property I'm looking at. I'm upset.
Yeah.
A lot of money up front.
Sure.
Go ahead.
No, go ahead. I'm sorry. I was just agreeing with Ed.
Yeah.
It's a lot of money to put down.
Yeah, it is. So, you know, to Jerry's point, you know, the DSCR, and here we have that. And DSCR, for those of you that are not familiar with it, is debt service coverage ratio. It's how much NOI over your mortgage payment that you have to have in order to service the debt. And so, you know, typically they look for a 1.25, you know, debt service coverage ratio. And I've seen, like Jerry, what you're saying, I've seen some go 80% LTV, which is loan to value, at 1.2 DSCR, but that's fairly aggressive. And I'm assuming that's because, they still have some funds to give out. Is that right?
Yeah, they're getting more aggressive. They're behind on what they have to lend out for the year. They didn't lend out what they had to lend out last year. If you guys know anything about like how the government funds and all that work, these groups get penalized, for not using the money that they're supposed to use. So Freddie and Fannie are really pushing and trying to get deals done. The market's just not really allowing it right now. But they're, I think as the year goes on, they're going to get more aggressive. There's talks of more hikes coming in June and July. Who knows what's going to happen by then, but they're going to get more aggressive. So
hope not.
Yeah.
So yeah, that's great. So let's carry on with this one. So again, for the sake of this deal, let's say that it is $2.5 million, which is a steal, and everything else works out well. You could get the LTV up to 75% with a DSCR of 1.28, as long as the DSCR is matching the minimum requirements. And of course, the interest rate is going to vary depending on your loan term as well. But anyway, one thing that we do here is we take the going in cap rate that we calculated from the valuation and the current performance NOI, and we compare it to the interest rate. Your going in cap rate, excuse me, your going in cap rate needs to be above where your interest rate is. If your interest rate is higher than your going in cap rate, you're negatively leveraged, right? And what that means that it's likely going to be very difficult for you to service your debt, and you won't be able to, you'll definitely not be able to service your debt, and you won't be cash flow positive from that. So you want to be, your cap rate needs to be above what your debt interest rate is. We feel most comfortable about 50 to 100 basis points, which is 50 to 0.5 to 1% higher than the debt that we're getting in order to continue to attack. So am I missing anything here, guys?
Here's something to also realize as well with the cap rate. And it's be very careful with this. The solution of just putting more down shouldn't be one that you entertain in order to justify the cap rate. You'll hear that, like, oh, it doesn't trade at this cap rate, but you put more down and it makes sense. Sure, but just be careful of that. At the end of the day, don't hesitate walking away from a deal that you're not 100% sold on, because you can buy a bad deal and completely take you out of the game. So just be cautious of stuff like that.
Hey, Aldo. So,
Yes.
And Tracy, I think if this is the same deal I'm thinking, I want to say they've recently invested about $700,000 into this asset. There's all like brand new metal roofs on the building. They've done like full renovations, I think on, I forget, around 20 units, maybe 16 of the units, something like that.
Yeah.
Is that sound like the same deal?
Yep.
Okay.
Exactly. Mhm.
Yeah, I thought so. So, yeah, so, I've looked at this deal. Everything in Birmingham right now, pretty safe to say, even at a C class, is probably going to trade between 65 to 70,000 a door. Now, this is a little different because this is an auction, so who knows, maybe you can get a great steal. So maybe a good way to, although that we look at this one is, based on, again, and these are just rough numbers, but assuming the property is at 90% occupancy, what could you pay, I guess, on this asset, and still achieve like a 1.25 DSCR. So I don't know if that's maybe a way that you could look at this, but Jerry, feel free to chime in on that.
Yeah, I mean, what I'm looking, I just ran it through my system here, and what I was looking at is like between 1.8, 1.9 that you could get as far as debt at 6%. You know, and that's with the 175 NOI. And that's the max debt, you know, so it's if you was paying 2.5, you'd be at like that 25% down, you know, 75% leverage. You know, and I saw somebody said this is an opportunity zone.
Mhm.
You might be able to, you know, if it's affordable housing and things, you might be able to get a little better rate too. You could probably get down to the 5.5 range.
Mhm.
But you'd be at like a 1.3 DSCR or 1.8, 1.9. So what you guys have on the page there is pretty accurate.
Great.
Nice.
Yeah.
Good name. So it looks like Philip's pretty familiar with this asset, you know, with the area. I think, yeah, Philip, you've been here before. You're from that area, or you know it well.
No, I just use CoStar. I'm not from Alabama, I'm from Virginia. So
Oh, okay. Okay. Oh, well, thanks for doing that.
you're welcome.
So are you guys considering it or no?
We didn't consider it, right, Will? No.
No, not at this point. Not just because it is on auction, truthfully, is like one reason. Yeah, I think we kind of decided not to pursue it at this point. But yeah, I mean, if you could get it for the right price, it's a beautiful building. It's a beautiful asset. So you know, I think again, the key here is just not overpaying for it. And really kind of depends on, you know, how strong people come in with the offers. Like I said, you know, just based on what I know of this area, you know, 65 to 70 is pretty standard. 65 to $75,000 per door is kind of what the going rate is right now in Birmingham. So,
Okay.
you know, if you can pick something up at it, you know, pick it up at 50,000 a door, 52,000 a door. I mean, that you're doing pretty dang good.
Okay. And I guess with what I'm thinking is, you know, with the auctions, it could, like you said, it could really go up and, you know, way over what it's really worth.
Mhm.
It can really drive the price up.
Mhm. Yeah, absolutely. So, you know, if you go into a, you know, more detailed underwriting and underwrite at this, you know, 2.5 area with this current debt setup, I would definitely look at it. You know, and like Will was saying, you know, thing with an auction is you've got to have the capital ready to go, and you know, you kind of almost sometimes undergo or don't undergo some of the, you know, due diligence portion of it. You know, you gotta pick it up. So, you know, we're kind of, you know, a little bit conservative when it comes to that. Ed's the real, you know, he champions the creative and the risky. Will and I are the old school traditionalists here. So you get both sides of it.
Yeah, that's good. That's a good thing.
Mhm. So anyway,
Real quick, to on that note, we go over some of those questions, what to ask, how to approach that, like on the broker call that we mentioned that happen on Mondays. So we try to help with also navigating those waters and what to ask for in order to get the proper questions to be able to offer creatively, or just find other solutions that sellers may not realize they have.
absolutely.
Well,
Absolutely.
Tracy, hey, if you go for it, you know, I wish you all the best. I think, like I said, I think this is a beautiful building, and if you can get it for the right price, I mean, I think it's fantastic. Birmingham is a market that Aldo and I, you know, have, you know, heavy focus on, and so we know this market pretty well. So if there's ever anything we can do to try and support you, you know, let us know. Happy to help you out however we possibly can. And I don't know if you caught it, but you actually just got a debt quote right there from Jerry Miles. So he's threw his information in the chat.
Hook you up, man.
So
Oh,
feel free
okay.
to reach out to Jerry if you need some financing on
Okay, great. Thank you, guys. Yeah,
Yes,
appreciate
Do you
ma'am.
have,
that.
No,
do
I
you have
appreciate you
contacts
bringing
in
this up.
Birmingham, Tracy?
Huh?
Do you have many contacts in Birmingham?
No, actually, someone, it wasn't even my market, but someone that knows that I'm looking for apartment building brought this to me. Just ended up in my inbox a couple days ago, and yesterday I pulled it out and done the back of the napkin. Um, kind of came up with some of those numbers, but you guys explained more, about that and what the going rate is. That's very helpful. I really don't like auctions either because, like you said, people can really drive them up. Some people don't realize they're doing that, and some people do it because they got deep pockets and they don't care. They just want it. But you
Need a
can get
tax
lost
write-off.
in that, huh?
They just need a tax write-off.
Yeah, yeah. So, but I do like that market. When she sent this, I started looking around, and I've heard about it. So, maybe something that I want to, start looking at.
Yeah. Let us know how we can help.
Okay, I sure will. Thank you.
Awesome. Well, this was great. Thank you, Tracy. All right, with that said, we do not have time for another one, but we have time for Jerry. So please.
I just wanted to tell everybody, keep an eye out. If you're underwriting deals, keep an eye out at the 10-year treasury. If you're underwriting deals that are going to qualify for agency debt. We was like 7 or 8 days ago, the treasury was like at 3.3. Friday it closed out at 3.8. So I mean that's a half point
Nice.
difference.
Holy cow.
Yeah, so just keep an eye out for it. Because that's what's going to determine your rates when you're getting agency debt is that 10-year treasury, and it can change daily, and the agencies know it's changing. So like when we're doing Fannie Mae loans right now, the Fannie Mae, they won't lock in a rate until closing because they're worried they're gonna get in trouble because the treasury can change so much in just a couple days time, so. So, and you can lock in the rates with Freddie Mac, but you're going to have to pay to lock them in. So.
Wow. That's good to know, Jerry.
Yep.
And guys, quick plug-in also for Jerry. You guys are up tomorrow night, right?
Yeah, we have it going on tomorrow night. Yep.
Tell them a little bit about it.
We'll be talking a little bit about the current debt market, and we give an update every time we do one of these, and then we'll be talking about application to closing, and it'll be agency debt based, and we'll just be talking about the process of going application to closing and kind of the hurdles and things you're going to have to jump through. So
Love it. Don't miss it.
Good call, guys. Good job.
Yeah, no, thanks for being on for the debt quote, as always. Appreciate you. With that said, folks, that is all. Thanks for being on. Thanks for bringing on the deals. Bill, thanks for participating on the chat, and all of you for joining us. Hopefully this was valuable to you, and we will be here as long as we need to provide you value. And please let us know if there's anything that you want to cover on these as well. Thank you as well, Mario. And with that, you all have an amazing, amazing rest of your night.
All right, y'all do the same. Thank
Good
you.
day, everyone.
Night.